For me, I'll monitor this chart. TLT is drawing closer to my support line, and that can be a start of a correction. Hey friends, what I said previously came through faster than I thought. So what now, and what is my plan? Bonds are usually viewed as a safer asset compared to stocks. As bond prices reach lower, this will tempt the big funds to shift money there. If bond used to have a yield of 1% here, and now the yield is 2% due to the drop in price, it's very tempting. Big money, and I'm talking about the big sovereign wealth funds level that manage billions and trillions of dollars. Their goal is to simply grow money with inflation for wealth preservation. Bond prices dropping traditionally will move money from a risk-on asset to a risk-off asset. For example, from stocks to bonds. That's why the market is panicking. Let's go to the charts, and I'm going to use TLT Treasury Bond to illustrate my example. In March, when the whole COVID came on and the stock market started plunging now, the bonds flew all the way up. This was a perfect example, a perfect setup for risk-on asset to risk-off asset. Since then, bond prices has been on a sideways trend moving down. And in 2021, bond prices start to fall. This was my prediction. I kind of drew it moving this way. It's moving down faster than I thought. And it's quite crazy. Everything moves up fast and everything moves down fast. If you look at the long-term charts, and this is going back all the way back to like just after the dot-com bubble, you've seen TLT on a steady rise within the trend channel. The resistance line, this is the resistance, and this is the support line. It's been quite stable, and lately, because of all the monetary policy, there's been a lot of volatility, so it goes down further and it goes up further. Bond prices are here now. This is not the time to leverage. Holding power is king here. I do not believe the selling away of stocks and hold cash because nobody can time the market, and higher can go higher. And holding cash has never played out well historically for anyone over the long term. Great fund managers don't hold cash. All they do is shift money between assets. While bond prices continue to fall, I won't worry too much about the markets. It is not a fundamental shift like COVID. In fact, fundamentally looks pretty good. As COVID cases start to drop from mass vaccination, massive amount of cash sitting on the sidelines waiting to be spent and deployed. It's so much that silicon manufacturers cannot keep up. Adding stimulus package coming, it is all good, man. The US government needs money to fund the stimulus package. So this is how the money flow will look like. The central banks will buy the bonds and bond prices will go up. Banks will receive the money and out it goes to the public and the stock market goes up. Wrapping up, again, nothing to worry about. Just don't leverage. Position yourself for the long term, you are fine. For me, fundamentals look strong. Markets is just finding a balance. I'm not taking my money out. In yesterday's total market sell-off, nothing was spared. Usually after a total market sell-off, when money comes back in, the stock market is the first place money will flow. So just chill, relax, and don't just keep staring at the stock market. Staring at your screen doesn't increase the stock price. Do you realize that magic? So look far and don't invest like a donkey.